1.9%. That's the figure that shows the UK has grown at its fastest pace since before the crisis and confirms the UK as Europe's strongest major economy in 2013. But still, investors remain sceptical. Joining me down the line to share his views on the matter is Neil Prothero. Neil, according to some investors, to date, the recovery has been somewhat unbalanced, raising questions about the sustainability over the medium term. If the economy is in a bit of a sweet spot, though, should we really be questioning whether it is the right kind of growth or just be satisfied with any type of growth?
Well, I think given where the UK economy has been, we should certainly welcome that there has been some growth in the UK economy, and that there has been sort of some momentum that's clearly building up now. The economy's grown quite strongly in the past 3 quarters, and this can be good on a more broader basis in terms of boosting wider sentiment. People think the economy is growing, and that will maybe encourage them to spend more and businesses to invest more. And it's also good news for the public finances in bringing down the deficit, which in the UK, as everyone knows, is still very high. But in terms of I think it's right to question the form of growth and the type of growth that the UK is now receiving and creating. You only have to look back, obviously, pre-crisis, the UK economy grew very strongly for a long period, up to 2007, but you could question that the scale of the crisis that followed suggested that the form of growth there wasn't ideal, and I think there is sort of concerns moving ahead as to how sustainable the current period of growth will be.
Indeed, the recovery so far has been driven by consumption. Therefore, real wages of 0.9%, well below inflation, could lead to a reduction in consumer spending. However, there has been the suggestion that if you have nearly double-digit growth on construction, we can be confident it will in time lead to some punchy numbers in the wage sector. Do you share this optimism?
I think it's difficult to say on the wages side. I think the wage growth has been very weak in the UK for a long time, and at the moment we don't really see too much chance of a rapid turnaround on that front, partly related to a lot of issues with the UK economy in terms of very weak productivity. That said, inflation has weakened over the past 6 months or so the pressures on household finances have improved slightly. And if we see a continuation of this period of growth in the UK economy, and that will sort of drive, hopefully, business sentiment becoming a bit stronger than that may start to flow through into the wages in terms of demand and therefore wage growth. But I don't think there's going to be any major improvement on the wages side for quite a few years yet.
Admittedly, the UK economy remains 1.3% smaller than it was prior to the financial crisis. By contrast, the US economy is now more than 5% larger. At this rate, the UK economy may return to its pre-crisis size around the middle of this year, according to some. Therefore, for now, is it more the level of economic activity, not the rate of growth, which is important? Do you agree?
I think, yes, it's to a point. I think, obviously, as I've implied, the actual growth rate is important at the same time in just terms of, given that the UK hasn't grown for quite a long time since the recession, so to have a period of growth and sort of sustainable growth, at least over the past 3 or 4 quarters, is important. But at the same time, you have to sort of say that the UK economy is still to reach its pre-crisis level. You can compare that to a lot of other countries, such as the US and Germany and Canada, and the G7. Their economies are now larger than they were at the pre-crisis level. So the UK's still got quite some way to go. And in terms of the level, I think that's something that the Bank of England in particular will be looking at rather than necessarily the quarter-on-quarter growth rates. In terms of its future monetary policy, we'll see that the overall level of activity in the UK economy is still quite weak, given where it has been in recent years. And so I think that's one of the key areas that it will look at to sort of suggest that monetary policy is still going to remain very accommodative in the short term. So I don't think there's going to be any rate rises or anything like that anytime soon.
To some extent, the GDP data might have been a bit of an anticlimax. The reading is bang in line with expectations, which didn't give the market much to work with today. Gilts were little changed, sterling wobbled slightly, but is now steadying. As the UK and sterling is the positive surprise story of 2013 and is outperforming its European peers, what is your outlook for the pound against the single currency?
That's right. The GDP data did pretty much come in on track. A little bit weaker than consensus, but most people had 0.7 or 0.8 penciled in. I think for sterling, sterling has been strengthening against most currencies in the past 3 to 4 months, and we probably expect that trend to continue. I mean, actually, all the major currencies in terms of the dollar and the euro they've all performed reasonably well. Obviously, in the US, you've got monetary policy slightly tightening now as the Fed starts to begin its taper, and so that's providing support to the dollar. So sterling against that is on a par. And even in the Eurozone, which has had a lot of problems, obviously, with its economy, but the actual euro currency has held up fairly well, given the scale of the problems across the region there. But as we sort of say, the UK growth has been strong in recent quarters, and we expect that to continue for the next 1 or 2 quarters at least, and so that will continue to provide support. So we expect a bit more strengthening of sterling. And from a manufacturing side, that does raise some sort of issues in terms of supporting the manufacturing sector. We would like to see a slightly weaker currency going forward to provide some export boost.
Neil, thank you so much. Well, viewers, that's all from me and Neil for the moment. Click back to Dukascopy TV for today's Commodities Corner with Ben Jones, focusing on metals. But for now, it's goodbye.